Most traders don't lose money because they don't know enough. They lose money because of what's happening inside their heads. And today, I'm going to take you deep into the one place most trading educators completely ignore: your mind. So if you've ever blown an account, made a trade you knew you shouldn't have, or watched a winner turn into a loser because you couldn't exit, this video is going to change the way you think about trading forever. Stay with me all the way to the end. And before we go further, if you've ever felt like the market is personally working against you, drop a yes in the comments right now. You are not alone, and by the end of this video, you'll understand exactly why that feeling happens and what to do about it. Here's the hardest truth in trading: the market doesn't care about you, not even a little bit. It doesn't know your name, your bills, your dreams, or how badly you need this trade to work. Yet the market is just millions of human beings making decisions based on their own fears and greed. And when you sit down and open a trade, you're stepping into an arena with some of the most sophisticated institutions and experienced traders in the world. I'm not telling you this to scare you. I'm telling you this because the moment you truly internalize that the market owes you nothing, that's the moment you stop being a victim and start becoming a professional. That most retail traders operate from a victim mentality without realizing it. They say things like, "the market took my stop," or "they hunted my position." And while those feelings are understandable, the mindset behind them is destroying their results. When you believe the market is doing something to you, you give up your power. You stop taking responsibility. And without responsibility, there is no growth. So the first shift I want you to make today: stop thinking about what the market is doing to you and start thinking about what you are doing in the market. If this is already hitting for you, hit that like button right now. It takes 2 seconds, and it genuinely helps this content reach more people who need it. Now let's talk about the real reason intelligent, hardworking people consistently lose money. It's not lack of knowledge. It's not bad timing. It's the way the human brain is wired. Your brain was not built for trading. It was built for survival in a very different environment. Your ancestors needed a brain that could recognize patterns quickly, follow the herd for safety, seek immediate rewards, and avoid danger. Every one of those survival instincts, the ones that kept your great-great-grandparents alive, those same instincts are working against you every time you sit down to trade. Your brain is wired to follow the herd. When everyone is talking about an asset, when social media is buzzing, your brain says, "this must be safe, everyone else is doing it." But in trading, by the time everyone is talking about something, the move is usually almost over. Smart money has already positioned itself. Your herd instinct is killing your account. Your brain also seeks immediate rewards. This is why traders take profits way too early. They want the dopamine hit before it disappears. And it's why traders hold losers too long. Because closing a losing trade triggers real pain, so the brain says, "just wait, it'll come back." Then there's loss aversion. Research consistently shows the pain of losing money is roughly twice as powerful as the pleasure of gaining the same amount. Losing $100 feels about twice as bad as gaining $100 feels good. This asymmetry creates all kinds of destructive behavior: moving stop losses, overtrading to make back losses, risking too much on the next trade. Loss aversion is the silent killer of trading accounts. And knowing about these biases is the first step, but knowledge alone doesn't fix them. These patterns are deeply embedded in your neurology. Changing them requires specific work, and that's what we're building toward. Subscribe right now if you haven't. And because everything I share here is designed to give you a real psychological edge that most trading education completely ignores. Let me paint a picture of the cycle that keeps most retail traders stuck. It starts with excitement. You discover trading, you see the potential for freedom, and you get fired up. Maybe you have a few early wins. Your brain loves patterns, so you start thinking you've got a natural talent for this. This is actually dangerous. It creates overconfidence. And overconfidence leads to taking risks your actual skill level can't support. Then comes the first significant loss. The adrenaline kicks in. The ego says, "I can't end the day like this." And you start revenge trading, making impulsive emotional decisions to get back what you lost. Revenge trading almost always makes things worse. You're now making decisions with your amygdala, the emotional brain, instead of your prefrontal cortex, which handles rational thinking. This pattern repeats. A good stretch, overconfidence, big loss, revenge trading, more losses, frustration, self-doubt. Eventually, many traders reach despair and start searching for the magic system that will finally make everything click. They buy courses, join signal groups, hoping someone else's system will save them from their own psychology. But the same patterns follow them into the new system. Does this sound familiar? Drop a comment and tell me which part of that cycle you've experienced. Because you are not broken, you are a human being whose very normal brain is fighting against you in this unusual environment. The path forward is not a better system. The path forward is a better relationship with your own mind. So let's start building that. The first concept I want you to embrace is process over outcome thinking. Most traders are obsessed with outcomes. Did this trade make money? Is my account up this week? And I understand why. Money is the point. But here's the problem. You can do everything right and still lose a trade. You can do everything wrong and still make money. The market is probabilistic. When your emotional state is tied to outcomes rather than process, you are handing control of your mental health to random events you cannot control. Process over outcome means your job is not to make money on every trade. Your job is to make good decisions on every trade. Follow your rules, manage your risk, and execute your plan with discipline, regardless of what any individual trade does. Think about a great poker player. They can read the other players correctly, calculate the odds correctly, size their bets correctly, and still lose the hand because the cards fell a certain way. Does that mean they made bad decisions? Absolutely not. The quality of a decision is determined by the process that created it, not by the outcome. The best poker players don't tilt after a perfectly played losing hand. They know that over thousands of hands, their edge will express itself. That is exactly the mindset you need. Any single trade is essentially meaningless in the grand scheme of your trading career. And I know that sounds simple, but there is a massive difference between knowing something intellectually and actually living it emotionally. Most traders know they should cut losses and let winners run, and yet, in the heat of the moment, emotion overrides knowledge every single time, until you've done the inner work to change that pattern. Let me talk about something that doesn't get nearly enough attention: the role of your identity in your trading results. What you believe about yourself has a profound impact on what results you're capable of producing. If deep down you believe you always make bad decisions, or that you're not good with money, or that you don't deserve wealth, your trading behavior will unconsciously align with those beliefs. You will find ways to sabotage yourself even when you have the knowledge to do better. Where do these beliefs come from? Usually from childhood experiences with money. Growing up hearing money doesn't grow on trees, or watching money be a constant source of stress, shapes your subconscious relationship to it. And when you're trading, literally money on the line in real time, that old anxiety gets activated. An anxious nervous system makes terrible trading decisions. It cuts winners short because it's afraid of losing what it has. It holds losers too long because it's afraid of confirming failure. So the first step is awareness. Start noticing, not judging, just noticing, your emotional state during trading sessions. Are you anxious, desperate, angry at the market? Yet these emotions are not weaknesses. They are information. And when you learn to recognize them early, you gain the ability to pause before you act. That pause, that tiny gap between stimulus and response, is where all of your power as a trader lives. Share this video with one other trader you know who's struggling, because this is the conversation most people in this space never have. Now let's talk about discipline, because it's deeply misunderstood. But most people think discipline means willpower, gritting your teeth and forcing yourself to follow the rules. But if you're relying purely on willpower, you'll fail during periods of stress, fatigue, or emotional intensity, which is basically every trading session. Real discipline comes from having such a clear understanding of why your rules exist that following them becomes the natural choice. When you understand that your stop loss is not an arbitrary number, but a carefully calculated protection for your account. When you feel that at a gut level, you don't fight the stop. You respect it. Real discipline is also built through journaling. A trading journal is not just a log of your trades. The real power is in capturing the psychological dimension. What were you feeling when you entered? Were you following your plan or making an impulse decision? What happened after you entered? Did you manage the trade according to plan, or did you second guess yourself? When you journal this way consistently, patterns emerge. You start noticing your best trades happen in a certain emotional state. You notice you lose money consistently right after a big loss, or on certain days or when you're sleep deprived. This is personalized intelligence that no course or signal service can give you. It can only come from you, about you, and through honest self-reflection. Let's talk about losing streaks, because they are one of the most emotionally challenging things a trader faces. When you lose one trade, you tell yourself it's variance. 3 in a row, you start to wonder. 5 or 6 in a row, even experienced traders question everything. And in that state of self-doubt, they start changing their approach. And those changes almost always make things worse. Here's what you need to understand. Losing streaks are mathematically inevitable. Even a strategy with a 60% win rate will produce strings of 5, 6, 7 consecutive losses at statistically expected intervals. This is not a flaw in your system. It is the mathematical nature of probability. The key is to have a predefined protocol for drawdowns, decided in a calm, rational state, so you're never reacting emotionally in real time. Many professionals reduce position size during a losing streak, not because the market changed, but to manage psychological pressure. Some take a scheduled break to reset. Having this protocol means you've already decided in advance exactly what you'll do. That pre-commitment is incredibly powerful. And I want to ask you directly, what does your relationship with losing look like right now? Be honest. When you lose a trade, do you feel genuine acceptance? Or do you feel that knot in your stomach and a desperate urge to get back in and make it right? Share your honest answer in the comments. Self-honesty is the beginning of growth. The ego is another thing I want to address directly because it is absolutely catastrophic in trading. The ego hates being wrong. It hates admitting mistakes. And trading requires you to be wrong constantly and be completely okay with it. Every loss is the market telling you your thesis was incorrect. If the ego can't handle this, the ego says, no, just wait, I'm right about this. It removes the stop loss. It doubles down on losing positions to avoid the admission of error. Every single one of these ego-driven behaviors, moving stops, averaging down, holding losers, these are what create the catastrophic losses that wipe out accounts. Not bad systems, not bad luck. Ego. The market is never wrong. The market will do what it does regardless of how smart you are or how much work you put into your analysis. Accepting this fully, without resistance, that is a level of psychological maturity that most people never reach. But the ones who do trade very, very differently from everyone else. Let me shift to something that very few people in trading education are willing to talk about honestly, and that is the role of your risk tolerance, not the theoretical number you'd write on a form, yet your actual emotional risk tolerance. Most traders, when asked, will give you a theoretical number. I'm comfortable risking 1% per trade. But their actual emotional response when a trade is going against them tells a completely different story. The difference between your stated risk tolerance and your actual emotional risk tolerance is one of the most important gaps to understand about yourself. If you say you're comfortable with 1% risk, but your heart rate spikes, yet your palms sweat, and you can't think about anything else when a trade is down half of 1%, your actual risk tolerance is much lower. And trading above your actual risk tolerance means trading in a constant state of anxiety, which destroys your decision-making. The goal is to trade at a size where you genuinely don't care very much about the outcome of any individual trade, not forcing yourself to stay calm, actually not experiencing significant distress. For most newer traders, and that means trading much, much smaller than they want to. You want to build the account faster. You want results sooner. But trading too large creates a psychological environment where good trading is almost impossible. Paradoxically, you'll grow your account faster by trading small and making clean decisions than by trading large and letting emotions take over. Let me talk about fear because it shows up in trading in multiple ways. There's fear of losing money, which we've covered. But there's also FOMO, fear of missing out, watching a market move without you and feeling a desperate, almost physical urge to get in. FOMO is what drives traders to chase price, to enter at terrible risk-reward ratios, to abandon their criteria for the emotional relief of being in on the move. And 9 times out of 10, when you chase a move out of FOMO, you get in at the worst point or the market reverses immediately after you enter. The antidote is a genuine belief in the abundance of trading opportunities. There is no last train. There will always be another setup. Every missed trade that didn't meet your criteria is not a loss. It's a decision you made correctly. Start celebrating the trades you didn't take. I did my job by not taking that trade. Mean it. Then there's fear of success, which sounds strange but is very real. Unconscious fear of what success would mean, how relationships might change, whether you deserve it, whether you can sustain it. This causes traders to sabotage themselves just as they approach their goals. The trader who has their best month ever and then immediately blows half of it the next week. The trader whose account keeps hitting the same ceiling no matter what. That ceiling is not a market problem. It's a psychological one. Now let's talk about patience, because it is a genuine, quantifiable, competitive advantage. The market does not present high-quality opportunities all the time. There are days when the right move is to not trade at all. And being able to sit on your hands while the market is moving, while your fingers are itching to get in on something, requires a quality of patience most people haven't developed. We live in a world of instant gratification. Everything is available on demand. Trading is one of the last arenas where patience actually pays. And the traders who can wait for their setups, who can let 5-10 mediocre opportunities pass while waiting for one high-quality one, outperform dramatically over time. Every mediocre trade you take drains 2 things: your capital and your mental energy. The most selective traders often outperform those in the market every day, because when they do pull the trigger, they do it with conviction and clarity. And start measuring your discipline not just by how well you follow rules when you're in a trade, but by how well you resist entering trades that don't meet your criteria. That restraint is a massive part of the edge. I want to address something that has become enormously important in the age of social media. Social media has created a completely distorted picture of what trading actually looks like. What gets posted are the wins, the big wins, the screenshots of accounts that doubled in 2 months. Yet these stories are not representative of reality. For every one of those stories, there are 9 others where the account was blown shortly after. But those don't get posted. When you're surrounded by highlight reels of other people's trading success, your brain compares your real experience, the losses, the slow progress, the frustrating drawdowns, to their highlight reel. That comparison creates impatience, inadequacy, and pressure to take risks that aren't right for your skill level. Be very selective about what trading content you consume. Follow people who are honest about the full experience. Unfollow accounts that make you feel like a failure or that exist primarily to sell you something. Your mental environment is just as important as your market environment. Let me also talk about resilience, because this is the quality that separates traders who eventually make it from those who give up. Resilience is not the absence of difficulty, and it's the ability to move through difficulty without being permanently defined by it. Every successful trader has stories of significant losses, periods of doubt, and moments of wanting to quit. The difference between them and the traders who did quit is not that they had an easier journey. It's that they developed the resilience to stay in the game long enough for their skills and psychology to mature. Yet resilience is built through one specific psychological practice: processing setbacks as information rather than verdicts. A verdict says, "This loss proves I am not cut out for trading." Information says, "This loss is showing me something I need to understand better." The same event, a significant loss, can be processed as a verdict or as information. How you process it determines whether it becomes a story that limits you or a lesson that grows you. Part of building resilience is also having a full life outside of trading. Traders who have their entire identity wrapped up in their results are extremely fragile. When trading is going badly, their whole sense of self is threatened. Having meaningful relationships, physical health practices, hobbies, and other sources of purpose makes you far more psychologically resilient because your entire sense of self is not riding on your next trade. You can take a loss, close the laptop, just go for a walk or have dinner with someone you love, and come back the next day renewed. That ability to step away and recharge is not a luxury. It is a competitive advantage. One final concept I want to leave you with before the close, and that is the power of long-term thinking. Trading, done properly, is a years-long endeavor. It is not a 6-week course, and then you're printing money. The traders who operate with a genuine multi-year perspective on their development are making completely different decisions than those looking for quick results. When you're thinking long-term, you don't risk your account trying to double it in a month. A losing month is a bump in a long road, not a catastrophe. You invest in your development, in understanding yourself, in building your process, in refining your psychology, because you know these investments compound over time. Then consistency beats brilliance, always. A trader who makes 20% a year reliably, year after year with good risk management, that trader builds significant wealth over a decade. A trader who makes 100% one year and blows the account the next, that trader is starting over constantly. The compounding of skill, capital, and confidence over time is the real prize. And it's available to anyone willing to do the inner work, stay humble, manage risk, and commit to the long game. It's not about being the smartest person in the room. It's about being the most psychologically sound person in the room. That is the edge that actually lasts. Let me leave you with this final thought. Every trade you take is a mirror. It reflects back exactly where you are psychologically in that moment. Are you making this trade from fear or from confidence? From greed or from discipline? From reaction or from planning? From ego or from humility? The trading is one of the most honest feedback mechanisms that exists because the market doesn't lie and it doesn't soften the truth. It tells you exactly, in real dollars, what your decision-making is worth in that moment. And if you can approach that feedback with curiosity instead of defensiveness, if you can use every trade, every loss, every mistake as information about yourself and an opportunity to grow, then you are on the path of the serious trader, not the path of guaranteed riches, not the path of easy money, but the path of genuine, lasting mastery. And that path, while not easy, is deeply rewarding, not just financially, but as a vehicle for personal growth that very few other endeavors can match. Thank you so much for watching all the way to the end. That alone tells me you're serious about your development, and that's rare. If this video gave you even one insight that shifts something for you, please hit that like button right now. Share this with one trader in your life who needs to hear it. Subscribe and hit the notification bell so you don't miss what's coming next. And drop a comment below. Tell me which part of today's conversation hit hardest for you. I read every single one. Until next time, trade well, stay grounded, and remember, the most important market you'll ever trade is the one between your ears.